second day with our opening keynote. Over the past decade, financial markets have transformed dramatically. The days when traders waited for chart patterns or just indicators to form are gone long. Today, markets move because of real-time economic data, and they move within milliseconds. In a world where price reacts instantly to every new piece of information, traders need more than just experience or intuition. They need speed, infrastructure, and data, and that's exactly what we're discussing today. Welcome to real-time data and algorithmic trading. So please join me in welcoming Mr. Mahmoud Elshimy, the founder and CEO of Elshimy for Trade and Investment.
Good morning. This is Mahmoud Elshimy, and this session, a result of years of engineering work, trading experiences, and building automated systems that read, process, and react to economic data the moment it is released. Before we go in our system, we have to know most of traders rely on two major analytical methods. One of them, technical analysis, okay, and fundamental analysis. Technical analysis depend on those technical indicators, moving average, pivot points, support and resistance, and RSI. Each one of them increase the probability of your trade to be successful, okay? But markets move in real, and what fuels the market moving is the fundamental analysis, economic indicators, okay, like monetary policy, fiscal policy, macroeconomic indicators, geopolitical news, elections, wars, trading agreements. Okay, so if we need certainty decision, we have to follow the fundamental analysis. If we need probability and increase the probability, we will follow technical analysis. Another definition for difference between technical and fundamental analysis. Technical analysis learn you when to trade, and fundamental analysis learn you why to trade, why to take this decision, and the technical lead you to when to take this decision. Okay, we will go to evolution of algorithmic trading methods. Okay, since 2 centuries, in floor and trading halls, orders take by outcry, okay, in the floors. Then trades information transformed to traders by ticker tapes. Okay. After that, telephone and telex to give the orders to the floor, to the broker in the floors from traders. After that, when PCs invented, we transferred to electronic trading by PCs. After that, traders directly connected to the floors, exchange floors by ECN accounts, and now all decisions taken by not by computers but by chips, which is called high frequency trading (HFT). algorithmic trading. Okay. After that, we talk about history of trades and news, from the famous story of Rothschild and Waterloo, when Europe by British UK, they fund their alliance to defeat Napoleon. Okay, but when the UK bonds, most of traders afraid of it, because if Napoleon defeat the UK alliance, okay, Rothschild got the news earlier of Napoleon's is defeated. Earlier, UK government and the traders 24 hours earlier, okay, and they take, because of this news, early decision, and make one of the famous history of trades and news. Okay, after that, Paul Reuters, all of us know Reuters as agent now. Paul Reuters, he got the news earlier. He used his pigeon messengers and telegraph to transfer the prices between exchanges, but he sells this news to traders. We want to say Rothschild act on the trade and Reuters act on the news, but Reuters sells the news to traders. Okay. After that, Charles Dow make the news in journals. Every day he collect all the news and analytics and make it in daily newspapers, and he distribute the ticker tips to financial institutions and banks. Okay. Also, he sells the news, not act on the news. Then Paul Tudor Jones, this person also trades the news. He by using trading the news and technical analysis, he merged this. And the famous one, expect the Black Monday in 1987. Okay. After that, the famous one now is Michael Bloomberg. He was banker, but he left his position and started his business by invented the Bloomberg terminal. He collect inside it the prices, the news, the analysis for traders, and he start the era of real-time trading. Okay. Most of traders, professional traders now use, of course, Bloomberg terminal. Okay. Now we talk about how to design the algorithmic trading. We'll go through these items. Fundamental analysis for real-time trading and source of real-time data feeds, server infrastructure, coding, programming, broker support and latency, low latency execution. First of that, what we have to know what will move the market in the data. There is a lot of economical news every minute, every second, but we have to know what moving the market. Okay. There is macroeconomic indicators, market movers. Not all economic indicators move the market. As example, there is retail sales of USA as example. These not market movers these days, but inflation, jobs is the market mover these days. Okay, and what market pricing for the data, some data is priced. As example, next 10 of December, all market know the Federal Reserve will cut the rate. So it is priced news. Okay? And what consensus for expectations from institutions. Okay? And we have to know what the impact of each data results of the market mover news. Okay. What is the sources of real-time data feeds? First, government resources like PLS for non-farm payrolls, Federal Reserve ECB, and its statisticals, government statistical institutions. And there is private real-time data feeds providers like Refinitiv, Tom Computers, and Bloomberg Professional Services. And there is websites famous like Trading Economics. Okay. What is the server infrastructure you need? What is the server infrastructure criteria you need for your design? You know, the lowest being with broker. You can't take the news as example in Doha or in Saudi Arabia. You need your servers to be near to the broker and near to the market. The lowest ping time, 1 millisecond, lower than 1 millisecond, 5 milliseconds. Okay, and your server have to be lowest ping time with data source. You have your server to be near to data centers of as example for USA BLS in Virginia, or to data centers of Europe and UK or China and Japan. Okay, and you have your servers have high computing, high performance computing to process your data in less than 1 millisecond, 2 milliseconds. If it is texts, maximum 200 milliseconds. Okay, and of course high internet speed connections. Okay, what programming language you need? We use C++ and Python, Java, and the MQL, which if you use MetaTrader 4 or 5, you will need MQL. Which brokers will support broker criteria? Of course, you have to open ECN, a broker support ECN account to be connected to liquidity providers or to market directly. And the execution time is the server of broker have to be lowest execution time. And ultra low or zero spreads. Okay, as example, we use Forex time FXTM. There is another broker support this criteria, but our tests meet with FXTM. Okay, we'll introduce case study. As example, for Australia employment report released, job report released in 16th of October. Here we look to market pricing, market priced rate cut of rate cut expectations was under 50%. Okay, what happened? It was at 15 October. Data released at 16 October. What happened? Here is data released at 16 October. Unemployment rate was market mover data. Policymaker of Reserve Bank of Australia will cut rates depend on inflation and job report. What happened? Market was expect unemployment rate to be 4.3, but actually it is released 4.5. What happened? the expectation of rate cut increased to be more than 80% in the market. This is what happened. This is spike. Okay, you got this spike once data released. Okay, now we see this market pricing, this market data expectations, this the impact of studying of this market mover and the pricing and expectations, and we wrote scenario if data came beat the expectations higher or lower than. Another case study, it is the non-farm payroll of USA in 1st of August. You can see this is from FedWatch. Yeah, most of professional traders know the FedWatch. Okay. At 31 of July, before data released here, the percentage of rate cuts at end of year to be 3.75% interest rate of USA to be probability of this rate cut 7%. No rate cut expected at the end of the year. Okay. Once data released at 1 of August, forecast was 110,000 jobs, and it came. It is released 73. Lower job report. Weak job report. What happened? Price market expect the rate cuts to be more than 50% at 1 of August, from 7 to more than 50% rate cut at end of year to this value. What is the market response? Once released, you saw this spike of this is gold the price. Okay, market makes this price very fastly. Okay, the conclusion is data plus time equal smart trading. Okay, and certainty. Results of this, we have the algorithm our company make driven by real-time data. Okay, we will show you some results. This is an example. Sorry. This Australia job report in 13 of November, last 13 of November. As this is expectations, this is the actual data, 4.5 unemployment rate, but is actual 4.3. What happened here? This spike, we catch it in real time. This 1 minute candle, okay? What happened in this 1 minute, or we opened the trade at 0 seconds, and we close after 25 seconds. We make result 10% of the balance with using leverage 50. Okay. Another result, it was Bank of England rate decision last 6th of November, last decision. Expectation of rate decision was 4%, and actual it was released 4%. But what happened? The vote of Bank of England policy committee members, okay, was expected to be 3 vote for cuts, but it is released 4 vote for cuts. Those 4 persons doesn't change the rate decision, because there are nine members in Bank of England, but they make market they make market expect sentiment of rate cuts increase. What impact? Although rate cut, no rate cut, but because of this vote, JPP make this 1 minute candle makes this spike. Okay, when because of we got in real time data, we got this spike. It make in 1 minute and 15 seconds, 18%. We using leverage 1 to 90. Okay, the last result we will show you. You remember 1 of August, non-farm payroll. Okay. The case study we show about the rate cut expectation for Federal Reserve at 1 of August. We use, because it's this big deviation, we use leverage 1 to 140, and you make 140% for this balance, and we make this profit by our algorithm in 12 minutes. We open in this second 3, and we sorry. We open at this second 30, minute 30, second 1, and we close at 42 minutes. Yeah, duration is 12 minutes. We make this percentage. Okay. Any question? Okay. Our company introduced this algorithm for retail traders. We are first company trading management. Behave when you introduce trading depend on fundamental analysis and real-time data. Okay, you can visit us our booth number 30. Thank you.